want to bring Andy in because, Andy, first I want to welcome you to the show. Let me just share a little of your background with the audience. I know you've spent at least the last 35 years investing, trading global markets. You've had stops at Bridgewater, Brevin, Howard. You were the chief strategist there, Salomon Brothers. So Salomon Brothers on the resume means you've been around. I want to first ask you about Ray Dalio stepping down from Bridgewater. This is a day after changing his mind on cash. Just your thoughts?
Sure. I worked with Ray at Bridgewater for many years. This has been planned for a decade with some fits and starts. The other two CIOs are the sharpest mind in investing that I've ever had the pleasure of working with. I think Greg and Bob will pilot this ship. Already they've been doing it well, and I think have no doubt that they'll do it great going forward. But as it relates to the cash issue, which I think is an interesting issue, the cash is trash comment back in December was certainly the headline. I would just like to say there might have been a nuance around that. If you listened, he also said that bonds are cash too. They're just cash that's delaying the return of that cash. I think he was saying all forms of cash are trash, and his comments yesterday are interesting to me because now I think he's saying the whole yield curve, cash today and cash in the future, is no longer trash, which makes an interesting point on whether he stays bearish bonds or not.
So let me get to what you're doing, Andy. And you put out a tweet over the weekend that caught our eye, right? Now, first of all, I'll let the audience know you're a more sophisticated investor than most people. However, this was interesting. I bought the close on Friday, as big a size as my risk management allows. What was the motivation for that move?
Right, it's a little wonky. It was quarter end, and there was a very large mutual fund that was doing a forced sale. You saw $6 billion for sale market on close. And I think from my analysis, they were selling all day as well, keeping pressure on markets and then finally smashing the close. And so I thought that was an interesting opportunity.
Yeah, and I got to be honest with you, that close Friday had a climactic feel to it. So I know a lot of traders. Andy, I see you also talk a lot about hedging. A lot of our viewers are interested in that, particularly, as their core portfolios have sort of fallen apart. Again, it's not sophisticated, but are there certain things individual investors could do to sort of help them mitigate these wild, volatile markets?
Yeah, I mean, I think you have to start at the high level, which is that the QT that people started being interested in after the minutes in January has essentially crushed all assets. So there was no hiding. Last week, as I was getting bullish, I also noticed that the value of most assets, bonds, stocks, gold, everything was down. And in fact, was the portfolio of assets, balanced portfolio of assets, was down near the lows of the GFC in terms of valuation. So I think we still have this QT effect, but a long portfolio of, balanced with bonds, stocks, gold, other commodities, there's a false dawn maybe. Right. It may not last, but, we're up 5.5% already on the S&P. And I think this, the next, month can surprise people.
Surprise people to the upside.
Yeah.
Okay.
I mean, I think max hawkishness is done.
Yeah.
It's in the rearview mirror.
I like that